What if I told you that every major alt season in the crypto market since 2014 could have been anticipated by just one key macroeconomic indicator? This single metric helped investors capture a 1,000,000% move between 2015 to 2017 and a 4,000% rally from 2018 to 2021. It also warned about the sharp 90% decline in 2018 and the 75% drawdown in 2022. And in this video, I'm going to show you exactly what it is and how it's already mapping out the next alt season. Alt season refers to periods where cryptocurrencies with smaller market capitalizations, known as altcoins, deliver spectacular returns, and in some cases, life-changing returns. Since the beginning of this bull run in 2023, Bitcoin has rallied by 600%, adding nearly $2 trillion in value. In comparison, the altcoin market has risen by only 250% over the same period, adding just $1 trillion in value. This big divergence in performance between Bitcoin and the rest of the crypto market has been painful for altcoin investors that have been waiting for those life-changing gains. In fact, so far, in 2025, Bitcoin has already hit new highs, while the average altcoin portfolio has actually declined in value. So this has been a very one-sided bull market, with capital concentrating into Bitcoin, while the rest of the crypto space has been left behind. One way to see it is by looking at this chart showing the gaming ETF. Like altcoins, the gaming sector leans heavily on discretionary spending, so it tends to perform well when people are confident, willing to take risks, and have excess capital to deploy. In that way, both gaming and altcoins serve as a kind of barometer for speculative appetite. And when we put the altcoin market on top, the relationship isn't perfect, but the overall direction has been fairly similar. Since 2022, both have been stuck in a sideways range, showing that risk-taking behavior has stayed muted. On the other hand, if we replace the altcoin market with Bitcoin's price, we can see a clear change in character. Up until late 2023, Bitcoin was also moving closely with the broader gaming sector, reflecting its place as a speculative asset. But that started to shift here in late 2023, once institutional demand picked up and the digital gold narrative took hold. That helped Bitcoin to diverge away and hit new all-time highs, while the rest of the speculative space stayed flat. So for altcoins to catch up, it's not enough for only Bitcoin to rally today. We need to see real speculative appetite come back into the market. To get a better read on speculative appetite, we can look at the Russell 2000. This index tracks 2,000 small-cap companies in the US. Now, if we put the altcoin market on top, we can see that these two lines move very closely together. When small cap stocks move up, altcoins tend to rally too. And when small caps decline, the broader crypto market usually follows. Since the bottom in 2022, small caps have risen around 35%, but are still trading nearly 10% below their all-time highs from 2021, telling us that the broader economy is still struggling, and their weakness over the last couple of years has clearly shown up in the altcoin market too. After all, small businesses are the backbone of the economy. They make up 99% of all businesses in the US and are responsible for nearly half of the country's total employment. And they also sit at the highest end of the risk spectrum in the equity market, just like altcoins do in the crypto market. So altcoins are essentially the small caps of crypto. And just like interest in taking risk in small cap stocks varies depending on macro conditions, it seems altcoins also closely match this. This can help us build an extremely powerful tool that can tell us when the next alt season can start, something we'll cover in just a second. But typically, investor appetite for these kinds of risk assets kicks in when the broader economy is doing well. In other words, true risk-on sentiment tends to emerge after the core economy starts showing strength, like rising demand, growing production, and healthy fundamentals. That's usually when capital begins rotating into small caps, and from there, into even speculative areas like altcoins. But that rotation hasn't happened yet because the real economy, as reflected through small caps, has been under pressure. We can see evidence of this by looking at this chart showing the earnings for small caps. Since 2022, small cap earnings have basically been moving sideways, indicating that the broader economy hasn't really picked up. Now compare that to the S&P 500, where earnings have been rising steadily since 2023 and have already hit new highs. That tells us that the recovery we've seen so far has actually been quite narrow, because while certain areas of the economy are doing well, mostly the big names, there hasn't been a real recovery for the average business or the average person. And when that's the case, most people aren't in a position to take on excess risk or chase speculative assets. That's one of the key reasons why large caps have significantly outperformed small caps in this bull market. We can see that clearly through this chart showing the S&P 500 relative to the Russell 2000, essentially large caps versus small caps. Since the bottom in 2021, large caps have outperformed small caps by nearly 70%. So capital has flowed into large caps as investors sought safety and stability in this uncertain and narrow economic recovery backdrop. And this same narrow dynamic has been showing up in the crypto market too. We can see that by adding the chart of Bitcoin dominance on top of this chart. There's quite a close relationship between these two lines, and this makes sense. If the S&P 500 is outperforming small caps, it means that investors are a lot more confident in these blue chip large cap companies that hold less risk. They still want to participate in the stock market, but they're only willing to buy the very safe large cap companies. And that is also reflected in the behavior of crypto investors. During these moments where you have a narrow economic recovery and stock market recovery, you also have a narrow recovery in the crypto market. This is exactly what we've had since August of 2022, with Bitcoin's dominance rising steadily, indicating that most of the capital flowing into crypto has been concentrated in Bitcoin. But here's where this gets even more actionable. This relationship doesn't just explain what's happening today. It can in fact help us anticipate what's coming next. You see, the performance of the S&P 500 relative to small caps actually leads Bitcoin dominance. For instance, here in 2016, small caps began outperforming the S&P 500, reflecting a risk-on environment in the stock market. That was followed by a big decline in Bitcoin's dominance a few months later, as a full-fledged alt season unfolded. The same thing happened here in April of 2020. Small caps outperformed the S&P 500 starting here, and a few months later in January 2021, alt season began as Bitcoin's dominance fell. Then, in mid-2021, small caps began to underperform the S&P 500, and just a few months later, Bitcoin dominance began to rise as well. This lag between the altcoin market and the performance of small caps relative to the S&P 500 is something we watch very closely at Bravo's research, because it gives us a potential early signal of when capital might begin rotating into altcoins. And right now, we may actually be approaching that kind of setup once again. This chart here shows something called small business optimism, an index that tracks things like hiring plans, capital spending, and overall confidence among small businesses in the US. When this index is falling, it usually means small businesses are pulling back, expecting tougher times ahead. But when it starts rising fast, it often points to improving economic conditions, especially at the ground level of the economy. And recently, we've seen a clear uptick in this index. It's now back to levels we last saw in 2021, 2020, and before that in 2016. And if we now look at the small cap index, all three of those previous spikes were followed by strong rallies for small caps. That's because rising optimism usually translates into more hiring, more investment, and more business activity, the kind of environment where small businesses thrive. It signals that conditions are improving, which tends to attract capital back into the most economically sensitive parts of financial markets. So if this current uptrend in optimism continues, it could mean that we're getting close to a point where small caps finally begin to catch up as the economy improves. And if that happens, there's a high probability that we see an alt season shortly after. To prepare for that, we've already initiated a position in an attractive altcoin that's recently broken out and looks ready for new all-time highs. We're also watching other altcoins on our watch list for an attractive risk-reward entry point. And just like with all of our trades, we have a clear risk management framework for the crypto market. Our approach has delivered some exceptional returns in the past year, like 30% on Bitcoin, 63% on Solana, and even 83% on Ethereum. And more importantly, we've kept most of our losses to under 5%. If you want to follow our strategy step by step with real-time buy alerts, sell signals, and portfolio updates, then make sure to subscribe.